Authorities in the US and Singapore are reportedly preparing to return close to 1 billion ringgit of funds allegedly siphoned from 1MDB to Malaysia. Citing people familiar with the matter, Bloomberg reports the US is looking to return about $200 million or 828.5 million ringgit. The sum includes about $140 million or 580 million ringgit from the sale of a stake in New York's Park Lane Hotel, and some $60 million or 248.6 million ringgit from a settlement paid by the producer of the Wolf of Wall Street movie. The transfer could reportedly happen as soon as next week. Across the Straits, Singaporean authorities are said to be preparing to return about 35 million Singapore dollars or 106.3 million ringgit. The sum was surrendered by former Goldman Sachs banker Roger Ng and his family after a Singaporean court recently cleared the way for the funds to be repatriated. Equity National is looking to buy into subsidiaries of government-linked companies. CEO Syed Yasir Arafat Syed Abdul Kadir says the government-linked private equity firm has identified several companies that appear attractive, and high-level talks are already taking place. He adds that these firms that are in Equinas' sights are mostly smaller subsidiaries within a very large company with no management focus. The new investments will be made under the Equinas Direct Tranche 4, which was launched in January with an allocation of 1 billion ringgit and an option of increasing this to 1.5 billion if suitable investments are found. Syed Yasir Arafat stresses that Equinas prefers to focus on freely competitive industries and companies without heavy reliance on government contracts. This is because exits are very important for Equinas. AllianceDBS Research has advised Lafarge Malaysia's minority shareholders not to accept the offer from YTL Cement as the stock could fetch higher valuations. To recap, YTL Cement is acquiring a 51% stake in Lafarge for 1.63 billion ringgit or 3.75 ringgit per share and extending a mandatory offer to acquire the remaining shares. AllianceDBS Research said in a note today that it was positive on YTL Cement's move to buy into Lafarge. The research house believes the deal would improve industry dynamics that have been pressured by intense price competition and sluggish demand. It points out that YTL Cement and Lafarge would have a combined market share of about 60%, which would lead to better pricing power. According to the research house, cement demand is due to recover with the revival of several major infrastructure projects, which should help support prices. With this improved outlook, AllianceDBS believes Lafarge could fetch higher valuations if it remains listed. As such, it says investors should not accept the offer. Lafarge ended the day unchanged at 3.72 ringgit, while YTL Corp was 0.85% higher at 1.19 ringgit. Mitsui & Co., one of Japan's largest trading houses, is making a strategic minority investment in Axiata Group's digital service arm Axiata Digital. The move gives AD's core digital businesses a pre-money enterprise value of $500 million or 2.07 billion ringgit. AD CEO Muhammad Khairil Abdullah says Mitsui would become a strategic shareholder and business partner at AD's core business verticals. The core digital business includes e-wallet service Boost, analytics data advertising, which is the largest independent digital agency in the region, and Appigate, an emerging global application program interface platform provider. The funds will be earmarked to fuel the next phase of growth for AD's core businesses. McDonald's Malaysia is aiming for 3 billion ringgit in sales this year and plans to pump in 1.4 billion ringgit to grow the business by 2025. Quoting MD and local operating partner Azmi Jaafar, Bernama reports that the company's plan was to invest 1.4 billion ringgit starting from 2016 until 2025. To date, it still has about 1 billion ringgit to inject into its business. The plan is to open 170 new restaurants nationwide by 2025, remodel over 200 restaurants and create 10,000 new jobs. Also in the pipeline are 20 new drive-through restaurants this year to complement the existing 167 drive-through outlets. According to Bernama, he expects the company's growth to remain in the double digits, moderating at 15%. Last year, the fast food restaurant chain posted a 19% sales growth year-on-year as it focused on investments in areas including local menu offerings, digital segments, and community ventures. It registered a 23% year-on-year sales growth in 2017, 16% in 2016, and 12% in the preceding year.